Welcome to another Capital Taxes Incorporated production. The 1031 Exchange, your key to tax-efficient wealth growth. Hi everyone, and welcome back to our channel. Today, we're going to be talking about the 1031 Exchange, a powerful tax tool that can save real estate investors a lot of money. What is a 1031 exchange? A 1031 exchange, also known as a like-kind exchange or Starker exchange, is a tax provision that allows real estate investors to defer capital gains taxes on the sale of an investment property by reinvesting the proceeds in another investment property of equal or greater value. How does it work? To qualify for a 1031 exchange, the properties being exchanged must be considered like-kind by the IRS. This means that they must be of the same nature or character, even if they are not identical. For example, a rental property can be exchanged for another rental property, or a commercial property can be exchanged for another commercial property. Two main types of 1031 exchange. Simultaneous exchange. This type of exchange involves both properties being transferred to and from the parties involved on the same day. Delayed exchange. This type of exchange involves a qualified intermediary, QI, holding the proceeds from the sale of the relinquished property until the replacement property is identified and purchased. The QI must be a third party that is not related to the taxpayer or either of the properties involved in the exchange. Benefits of a 1031 exchange. There are several benefits to using a 1031 exchange, including tax deferral. By deferring capital gains taxes, investors can keep more of their money to reinvest in their real estate portfolio. Flexibility. Investors can use a 1031 exchange to trade up to a more expensive property, trade down to a less expensive property, or diversify their portfolio by exchanging one type of property for another. Estate planning. Investors can use a 1031 exchange to pass on their investment property to their heirs without having to pay capital gains taxes. Drawbacks of a 1031 exchange. Complexity. 1031 exchange can be complex and require careful planning. It is important to work with a qualified tax advisor to ensure that the exchange is structured correctly. Cost. There are costs associated with completing a 1031 exchange, such as legal and accounting fees. Timing restrictions. There are strict timing requirements that must be met in order to qualify for a 1031 exchange. How to do a 1031 exchange. Here is a step-by-step guide on how to do a 1031 exchange. 1. Identify the properties you want to exchange. The properties must be like-kind, meaning that they must be of the same nature or character. 2. Hire a qualified intermediary, QI. The QI will hold the proceeds from the sale of your relinquished property and help you identify and purchase your replacement property. 3. Enter into a 1031 exchange agreement with the QI. This agreement will outline the terms of the exchange, including the properties being exchanged and the timeline for the exchange. 4. Sell your relinquished property. The proceeds from the sale will be held in escrow by the QI. 5. Identify a replacement property. You have 45 days to identify potential replacement properties and 180 days to purchase the replacement property. 6. Purchase the replacement property. The QI will use the proceeds from the sale of your relinquished property to purchase the replacement property. 7. Complete the exchange. The QI will transfer the title to the replacement property to you and release the proceeds from the sale of your relinquished property to the seller of the replacement property. Conclusion. A 1031 exchange can be a valuable tool for real estate investors who are looking to defer capital gains taxes and reinvest their proceeds in new investment properties. However, it is important to carefully consider the pros and cons before deciding whether or not to pursue a 1031 exchange. If you are considering a 1031 exchange, be sure to work with a qualified tax advisor to ensure that the exchange is structured correctly and that you meet all of the requirements. That's all for today's topic. Note, this video is intended for informational purposes only and does not constitute professional tax or legal advice. Consult a qualified tax professional or attorney for specific guidance tailored to your situation. This video is brought to you by Capital Taxes Incorporated. Thank you for watching, and see you in the next video.